Hello friends, welcome to our channel Stocks Factor and welcome to this playlist of tutorials of our product. In this video we are going to cover the tab Nifty and Bank Nifty analysis. So let's get started. So as the name suggests, Nifty and Bank Nifty analysis, in this particular tab or page of our dashboard, we are going to discuss about the price movements of the index, the two main indexes especially, that is the Nifty 50 and the Bank Nifty, which are the two main indexes of the National Stock Exchange, and the derivatives data which is published by the market for both the indexes. So as you can see on the top, we have one filter which is the index. You can select the Nifty or Bank Nifty, either of the indexes, and then we have a time filter. By default we are showing the data for 3 months, but you can show the data up to 6 months. Now let's start with the top right filter. So before I begin with all the indicators we have shown in this particular dashboard, let me tell you who will be the audience who will be using this particular tab, or what is the relevance of this particular tab. Right, so as you all know that in the markets, be it the long-term investor, be it the short-term investor, be it the positional trader, swing trader, intraday trader, all look for the index movements, right? Index movement is something kind of benchmark which every trader or every investor looks before investing on a particular stock or the index itself, when the person is doing the trading based on futures and options on the index, right? So Nifty 50, as everybody knows, it is the reflection of the top 50 companies of all the companies listed in the stock exchange. So the top 50 companies are chosen. Those are generally the large caps, and the composition is called Nifty 50. And the Bank Nifty, obviously it contains all the banking stocks which are listed in the National Stock Exchange. Right, so these are the two main indexes, and both these indexes are also available for the derivatives trading, that is the futures and options trading. So this page would be very beneficial for both type of people who are the investors or the traders. So for the investors, this page would be very beneficial in tracking the index movements, whether they are investing for short term or long term, so that they can track the movements of the index. For the traders who are doing the trading on the futures and options on the index, this page would be a game changer, and it would be really helpful for them, providing all the detailed metrics for the futures and options data, whether it is week wise or month wise. So let's see what we have for you in this particular page. So let's start with the top one, that is the top left. You can see the metrics or the chart which we are showing. This tells about the close price versus turnover. So what is turnover? Turnover means the total transaction done on that particular day on the index, right? So right now we have chosen Nifty, so you can see the total money transaction. So volume is something which is, so index doesn't give you the volume, because index is not directly tradable instrument. You can trade on the underlying stocks, but if you want to trade on index, you have to go for futures and options. So volume is not available, but the turnover is available. Turnover means that the total money transaction which has been done on that particular day for all the underlying 50 stocks. So that combined tells us about the turnover of the Nifty 50. So you can see that the turnover is shown in crores. So this can easily be related to the movement of the index. So you can see we have shown the close price, that is the yellow line, and the bars. So red bar shows that on that particular day the index fell as compared to the previous day, and green bar shows that index rose on that particular day as compared to the previous day. Now the gaps between the bars shows us the holidays or the weekends in which the trading was not done. Okay, so you can see that this is the turnover in crores, that is the bars, and the line, you can see the secondary axis which shows us the yellow line which is showing the close price. So you can see in the last 3 months the index has been continuously rising and making higher highs and higher lows. Now coming to the boxes, you can see on the top of the page we have few boxes. Let's discuss those. So starting with the first box, PCR. What is PCR? PCR is put call ratio. As you might be aware about this particular metric, this metric is generally followed by the traders, but it may be beneficial for the investors also if they are investing for the short term. So you can see the value of the PCR is 1.49, which is the current value as per the market data available of the options. So 1.49 is generally considered as the bullish momentum or the bullish movement in the index. So any value above 1 is considered as bullish for the particular stock or the index. If you want to know more about PCR, we'll make separate video about the theory of PCR and what is the relevance of PCR. So stay tuned for those videos, for the educational videos also, which we have in the separate playlist. If you want to know more about PCR, we'll make separate video about the theory of the PCR and the relevance of PCR in terms of trading or investing. So we'll be making such videos. So whatever metrics we have shown in this particular page, we'll make the videos on the theory and the relevance of those indicators in our educational playlist. You can always refer to that playlist to understand what these metrics mean and what is their significance and how to use them in trading or investing. So now let's start with the second box. It shows us the open price on that particular day, that is the last trading day. Then we have the low price, high price, close price, and the PE ratio. This is already given by the market. PE ratio means the price earning multiple. So right now the Nifty PE ratio is 32.86, which is generally considered quite high, above 30. Coming to the second row, you can see that we have the 52-week high value, 52-week low, 200 daily moving average, 100 daily moving average, 50 daily moving average, and 20 daily moving average. So 20 is the short term moving average, 50 is the medium term, and 2 long term moving averages, right? Now coming to another graph on the top right, you can see the close price versus futures cumulative open interest expiry on expiry. So we have shown this graph which contains the cumulative open interest. Cumulative open interest means the open interest including the current expiry plus the next 2 or 3 months expiry in which the liquidity is there. So we have collated, we have summed up all the open interest. So this gives you the holistic picture. So only the current month expiry data might not give you the holistic picture, the complete picture, but if you combine all the expiries data, it gives you the more clear picture of how the open interest is disbursed on different strike prices. If you are seeing the option chain or otherwise in futures, the combined open interest shows you how the open interest is getting developed daily by daily or on a monthly basis, or how it is getting rolled over from one month to another month. So you can see that we have, by default the data is shown for 3 months, but you can always increase the time frame up to 6 months. So you can see that the trend is going up, which means that the Nifty price is increasing and the cumulative open interest is also increasing. So what this indicates month on month, that every month new open interest is getting added in Nifty. So that means the Nifty is bullish as of now. So because the price is also increasing and open interest is also increasing, that signifies that long positions are getting added month by month. Okay. Now coming to the second row, you can see that this is the close price versus put call ratio trend. So in the above box, we were only showing the current number as on the last trading date, but this also shows you the trend with the close price. So this trend would help you in making decisions based on how PCR is changing as compared to the close price. So generally, if PCR also increases with the close price, that is considered bullish. So we'll talk more about PCR when we'll do a separate video on PCR about the theory and the significance of PCR in terms of trading and investing. Okay, so you see the last value is 1.49, which is here. So that is the last data point. Then we have shown the strike price with highest open interest band. So this graph, we have added something which gives you a high level idea of how the data in the option chain is working, right? So we have chosen the highest strike price of the put and the highest strike price in which open interest for the call. So both these strike prices in which highest open interest is developed on call side and put side, and we have shown that band, how that band is shifting, right? So you can see that this is on a daily basis. So you can see that the yellow line shows the put open interest, and the blue line shows the call open interest. So you can see that it is increasing. It means that the support level is shifting higher. So that shows you very high level that support level is shifting higher. So as you have already seen that the price of Nifty is also increasing and the support level is also shifting above. So this is generally considered bullish if the support level is shifting above. Then comes the third graph, which shows the close price versus futures cumulative open interest, right? So it's again the same graph as compared to the above one, which was showing the monthly trend. The difference is that this is on a more granular basis, means this is on a daily basis and this was on monthly basis. So if you want to see the daily trend, you can see that. So on the last trading day, you can see that what was the total cumulative open interest and what was the price, and you can also see that whether on a daily basis the cumulative open interest is increasing or decreasing as compared to the price, right? Now coming to the third row, you can see we have compared the Nifty price with the India VIX. India VIX is volatility index. So you can see that how the price is moving against the volatility index. So generally you can see that when price is decreasing, volatility rises, and when price increases, volatility decreases. Generally you must have find that in the bullish market, when the market is stable, the volatility falls and the price increases, but when the volatility increases, the price also decreases. This is the general trend. They both work on the opposite side generally. So now coming to the second graph, we have max pain. So max pain graph is based on the max pain theory, which is based on the options data. Means we have to identify a point where there would be the minimum loss for the option sellers or option writers. So this graph tells you that. So you can see currently for the Nifty, if we just zoom in on the chart, we'll be able to better see that. So you can see that around 11,200 or 500, 11,500, there is a minimum pain. Means here there would be minimum loss for the option sellers. Okay. Now coming back to the report, you can always zoom any chart by clicking on this particular icon, as I have done for this graph. So now coming to another one, that is the candlestick chart for the last 30 trading days. So we have shown the last 30 trading days candle as an additional information for this derivatives data. Now coming to the next portion of this particular tab. Here this particular two charts are based on the option data. So you have already seen the futures cumulative open interest in the above two charts. Now we will talk about the cumulative open interest of the option chain or the option data. So this graph is very important if you are doing the option trading, or even if you are following the trend, Nifty trend, by using the option chain, right? So this is the cumulative open interest of all the expiries on all the strike prices. Okay, so this is very valuable information. So you can see that right now the highest put open interest is on the strike price of 10,500, and significant open interest is there at 11,000. Then we have good open interest developed at 11,300. Then the highest call open interest you can see is at 11,500, right? So the highest put open interest is 10,500, second highest is 11,000, and highest call open interest is 11,500, and then you can see the second highest call open interest is 12,000. But you can see the more of a put open interest as compared to the call open interest. Now coming to the second graph, which tells us about the change in open interest by strike price, means the daily change. So this was the cumulative open interest on the last trading date. Now this is the change in open interest in the last trading date as compared to the previous day, right? So we have shown both indicators. Now you can see that in the last trading day, significant put writing was done at various strike prices at 11,200, 300, and call writing was done at the highest strike prices, that is above 11,500, right? So this gives you an idea of how the open interest is changing on a daily basis. Now you can see this particular filter on dates. This is actually the filter based on the weekly expiries. So as I mentioned that these both charts are based on the cumulative open interest of all the expiries in the future, right? So there could be many weekly expiries in which the liquidity is going. So we have shown the cumulative open interest. But if you want to see the open interest on a particular weekly expiry, right? So you can select that particular weekly expiry. So suppose today is 12th of September. So the current weekly expiry would be on the 17th of September, the weekly expiry I'm talking about. So I can just select this particular weekly expiry, and I can see what is the open interest being developed for this particular expiry, right? So you can see now the data has filtered, and you can see the open interest, the change, and both the cumulative open interest. And obviously if you want to select all, you can again select all the dates. So again the graph will be reflecting the cumulative open interest of all the expiries. Now moving to the last portion of this tab, that is the table, that is the more detailed data of the open interest on the futures as well as on the options. So here you can see I have sorted it on the date timestamp. So the last trading day is on the top. You can see 11th of September, which was yesterday, the Friday. The close value, the cumulative open interest as of the last trading date, which was also shown in the above graph, in the trend graph, but we have also shown here. Then the OI change, on the last trading date, what was the future OI change, then the price, then open interest change in percentage. So this is absolute number, this is in percentage, then which tells about the position status. So position status is based on the combination of price and open interest change means if the open interest has increased and the price has increased, it means the new long positions have been developed, right? So this is a very important information, whether on the daily basis new longs are getting created or long unwinding is done or new shorts or short covering is done. So these all 4 points you can see here, how on a daily basis activities are taking place. Then the rollover percentage, this is more of a significance when you are near to the monthly expiry. So as you can see on the if we talk about the previous expiry, the rollover percentage was around 80%, 79.92%. So this gives you a good indication of how the rollover is taking place from one expiry to another expiry. So this you can relate on month by month. So as we have already shown on the top of the graph also, the expiry on expiry trend of the open interest. So this was also a very important indicator, the rollover percentage. It should generally be good. So it is generally compared with the 3 months average. So if you see all the 3 expiries, those are available here, and you can see in the month of June it was 78.93, and then in the month of July it was 77.57, and then again in the month of August it was 79.92. So now if you average all these 3 numbers, so it means in the month of August the rollover percentage was good as compared to the average of the previous 3 months. So it is considered good. So it is considered bullish because the price is also increasing of the Nifty and the rollover percentage is maintained as compared to the 3-month average. It has not fallen but slightly increased marginally, right? So it means it is good, and long positions are getting carry forward month by month. So it means people right now are bullish on Nifty. Minor corrections would take place, but the general trend is in uptrend. That may change in future, but right now the data is reflecting us that. Now this is the call open interest. Now we come to the option data. So this tells you the cumulative open interest of call options together, and then we have the cumulative open interest of puts. So I'm talking about, as you can see on the above graphs, so we were seeing the open interest on different strike prices. Now this is the whole combined open interest on all the strike prices. So it means the total put open interest is 70 lakhs around, and call open interest is 47. So it means put open interest is almost 40% more than the call open interest. That's why our put call ratio is very high, 1.49, because put is more than calls, right? So it means it is on a bullish trend because the price is also increasing. You have to relate it to the price. So the price is also increasing and put open interest is very high as compared to the call open interest. So it means people are writing put more aggressively, so they are thinking that market will not fall. That's why put open interest is high as of now. So that may change in the another 2 or months because the scenarios change, but right now the data is showing us that the put open interest is very high and the price is also increasing. So that we saw in the above graph. So this way you can relate this particular data with the above graphs also. So put open interest change on a daily basis. Then the strike prices, this shows the strike price where the maximum call open interest is there, and this shows you the strike price where the maximum cumulative put open interest is there. So you can see that band, the band graph which was showing above, you can see on the last trading day the highest put open interest, call open interest was on 11,500, which you can also see on the graph. So you can also relate. So you can also see this on the graph that the red line is maximum on 11,500. So this number only we are showing, and 10,500 this is this bar. So the highest put open interest. Okay, so I think you have got the sense of the data, but still if you have any questions regarding this particular tab, because we have shown a lot many indicators in this page, but they are very valuable indicators, and if you religiously follow this data, it will give you very good insights about the overall trend, holistic picture of the Nifty or Bank Nifty, and you can easily follow how the trend is changing, right? So if you have any questions, you please post your questions on the comment section and we will definitely answer your questions. See you in another video. Take care and goodbye.